Good day of trade for the markets, clearly cheering the pause that RBI has given out in terms of the rate hike cycle overall. And that's something which is positive news as well, because overall, the majority expectation was a 25 basis point rate hike. Though there were, chatters in the market that there would be a possibility of a pause coming in, and that's exactly what has happened. What the markets were earlier pricing in was a 25 basis point rate hike. And due to that, now we are seeing a good amount of an uptick coming in terms of markets, where clearly you have Nifty, Bank Nifty trading at the day's highest levels. To discuss stock-specific action in today's day of trade, joining us on the show is Devarsh Vakil, Deputy Head of Retail Research at HDFC Securities. Devarsh, good morning and welcome to the show.
Thank you for having me.
Devash, my first question coming to you is around the banking pack. Clearly, we've seen the banking pack move pretty strongly, and it was the private banking space which was on an uptrend versus the PSUs. Now, with the RBI coming out with a pause, you are seeing the PSUs rally in today's session. What would your view and recommendation be?
So clearly, we feel that the uptick in the credit growth is there, and that gives an opportunity for the overall banking sector. See, we have gone through the NPA cycle. Most of the banks have cleaned up their balance sheet, and now whoever has access to cheap funds will be able to deploy them and generate a lot of operating profit. In fact, good private sector bank who has access to good technology are able to garner good liability side, and PSU banks, because of they have a reach in tier 2 and tier 3 towns, and from there they are able to garner a lot of liabilities. Right now there is a tussle going on in the market for garnering the deposits, and I think PSU banks are likely to be a beneficiary of that. So we were wary of PSU banks couple of years back, but since last couple of years, we have been recommending that apart from the private sector banks, which you should have in your portfolio as an exposure, you should have large private public sector bank as well, because the valuation difference is quite high, and it makes sense to bet on large PSU banks like SBI and Bank of Baroda. So we do recommend them that there is a room for those stocks also in the portfolio. And overall, I think since the credit growth is picking up, banks are likely to do well.
Right. So that's for the banking space as a whole. Moving on, you have the sugar pack that is in focus today as well, and that's mainly on the back of, the output which is lower from September to March on, period. Along with that, that's something which will impact prices as well going ahead. What's your view on the sugar segment?
So in sugar, the season is about to get over, and this time the expectation from the both sugar bodies, the National Federation of Cooperative Sugar Factories, the NFCSF, as well as the ISMA, is that the production is lower. In fact, it is likely to be lower by almost 10%, and we know why, because of the erratic weather conditions and also the diversion of sugar towards the ethanol. We are likely to see higher sugar prices. In not only because of that, because of the lower production in India and abroad, the international sugar prices are trending quite higher. In fact, in the New York market, it touched new highs yesterday. So sugar prices are high. Sugarcane crushing season is about to get over, and because of the bad weather condition, we saw states like Maharashtra and Karnataka, where the majority of the sugar comes. There, the weather was not good. So, in fact, 20% fall in the production in Maharashtra will lead to almost 10% overall India level fall, and that will lead to higher sugar prices for next year. And that is a good news for good balance sheet driven sugar companies. So there is a room for keeping sugar stocks in the portfolio right now. I think the government policy of supporting the sugar companies by giving good realization on ethanol will also help companies which has not only the sugar crushing capacity but also decent ethanol capacity also. So I think there is a room for keeping them about 5 to 10% in your commodity side of the portfolio.
Right. So that's with regards to sugar companies. Moving on. March, now the revenue for this is 20%, added around 324 stores. And this is the business update that they've come up with as well. Overall, what would you make of a DMart from a valuation perspective? Because For a stock like Smart, valuation has always been, a major criteria that everyone has, actually looked out for. And if you see in terms of the stock price performance of Avenue Supermarts as well, today is down around say 3.5%. And if you see its YTD performance, again an underperformer on a 1 year basis as well, it's been an underperformer. What would your recommendation be?
So, right, they have come out with a good standalone revenue fourth quarter numbers, about increase of 20%. And also there is a value in their DMart ready business piece also. But as you have mentioned, see, we uh, are value conscious investors, and we think that the at this valuation, we even if we give them a lot of room, there is a downside from our perspective. We even if we give them generous 34 times December 20 EV to EBITDA multiple, and also about 4 times to DMart ready, still the stock price is not now nowhere near to our targets. If we give them such a generous valuation, still we come up with a number which is at 3,000, which is clearly 500 rupees still lower from the current undervalued, underperformed price. So earlier it was trading around 5,000. Now it has come down to 3,500 levels, but still we think there is some room for a downside here. Company is great, the management quality is great, but at this valuation, it still doesn't make sense, and that's why market is also not able to give them the valuation which market other investors are looking for, and that's why it is underperforming. I think a couple of quarters down the line, we can again review this and see whether valuation has become attractive or not. Currently, right now, it still remains a sell in our ratings.
Right. Moving on in terms of Nika, now that's been an interesting story so far. If you see in terms of the stock price, last two trading sessions, we've seen almost a 10 to 11% kind of a jump that we saw in terms of Nika. And this was ahead of the business update that was shared yesterday, right? Now, today, the stock has again dipped into pressure. What do you make of the numbers, and what would you actually advise an investor to do? Do you think this is a time to hold, buy or sell?
So, actually, when the results came out last time, they had given a good top line growth, and they had given a guidance again yesterday. So around 150, 160, it was trading when the last results came out, and both in the BPC and fashion, their valuations are still much higher than our expectation. And that's why we gave a sell rating and give a target of 125, even if we generously value them at it almost 85 times FY25 beta. So that from there, 100, 150, 160, we gave a target of 125, and now stock has underperformed and came to that level. So again, after yesterday's announcement, we will see how their TAM and gross margins and other parameters move. Now, if somebody is owning it, I would not recommend them to exit now. It
Hmm.
since it has come down to a low level, but it is still not a new buy for us. Let's keep reviewing it. These are the stocks which we need to keep on radar. These are the stocks which have potential to grow exponentially. But as I mentioned, in case of DMart, valuations are still not in our league. So we'll wait for them to give better quarterly numbers and then review it.
Right. Moving on, Cholamandalam Finance. Now they have recorded a strong loan growth in the fourth quarter. In fact, the stock already tested its 52-week highs in today's session. And it is up almost around 10 to 12% in the past 1 week. What would your view be on this company?
Right, so disbursement for the fourth quarter was fantastic. In fact, they have given out about 21,000 crore worth of disbursement. This is about 65% compared to the last year. And we continue to monitor their segment-wise profitability, and all these businesses are doing quite well. So last quarter, when the results came out, stock was trading around 720 or so levels. And that time, after reviewing the results, we gave a target of 885. Yesterday, it was trading around 780 or so.
Hmm.
After the recent update, it has moved up 5-6%. But still, our target, which is about 4.5 times adjusted book value, is around 885. So it still leaves a room of about 6 to 7% upside. So after today's jump, also, we think that there is a still potential for stocks to do this stock to do well. Around 885, one can, if you have invested earlier, you can think of booking some profits. So otherwise, the kind of numbers they are putting out, it is looking quite strong. The business has potential and segment-wise profitability is good. We are monitoring their stress assets, and stress assets have come down quite drastically. So it looks good from here also.
Right. Another stock I want to discuss with you is the Ramkrishna Forgings. Now, overall, if you see the Class 8 truck orders, they have been on a decline. Apart from that, now they've won an order from the Ministry of Railways as well, and this is in a JV, and the order is worth almost 12,200 odd crores. What would your view be on a Ramkrishna Forgings, and what would you advise an investor to do?
Right. So this is one more company which is keep on performing. We have been recommending this stock from quite low levels. Last report which we issued was around 200 rupees with a target of about 250 and 300. I think stock has already achieved those. It's the second largest forging company, and they have established position in automotive industry, especially in the medium and heavy commercial vehicle segment. They are doing quite well in India as well as in the exports market. And their new recently brought on new facility on stream about the Jamshedpur facility where they have a warm forging press that has added to a capacity, and that is leading to the expansion which you are talking about. The new additions like these locomotive and railway coach segments are also doing quite well. So this company has been outperformer, that's been doing quite well. Recently, it has gone beyond our targets, but I'm sure after the new quarterly results, we will again review it and come out with a better target. Right now, it is trading beyond our target, so I don't have a specific recommendation on it, but this company continue to perform beyond our expectations.
Right. And the last stock I want to discuss with you is the Hero Motor Corp. Now, the company has come out with a voluntary retirement scheme for all of the employees. The last time they did that, I think, was back then in 2019. What do you think would this mean for the company from an operational perspective? And how much, will it aid margins? And what would you advise, an investor to do?
So the Hero Motor Corp has been an underperformer. Actually, the lower than expected demand was there in the third quarter, and we have seen the sustained weakness in the fourth quarter as well. So on back of that, we actually downgraded its earning, and now management is actually hopeful for the rural revival in FY24. They have given a positive rural outlook. They expect the two-wheeler industry to grow into double digit. They hope to launch a new model every quarter in FY24, and they hope to recover their lost market share in 24. They have recently announced one motorcycle in the 125cc segment, and there the model is Zoom, and there they have given a lot of features which are industry first. So if they manage to do that and if come out with a better models in FY24, I think there is a room for this company to garner back their lost market share. The valuation has become quite attractive, almost below 15 times earnings it is available. It's a good management and stock price has fallen to a decent level. So I think investors can start accumulating Hero Moto at these prices, and they can expect about 2,959 as a target over the next 1 year. So,
right, so that's with regards to Hero Moto. In fact, the VRS as well could lead to a path of efficiency. In fact, I was reading a couple of brokerage reports which are indicating that it could probably see a reduction in employee cost in the range of almost around 100 to 180 to 120 basis points. So that will be margin accretive as well, probably. So overall, I think, thank you, Devarsh, so much for joining us on the show and giving us your views in terms of the various stocks that we have discussed. And overall, it seems to be a good day of trade as well, with the markets nearly trading at the day's highest levels. Again, as we mentioned, on the back of the pause, the RBI has come back with on the interest rates. Thank you. Stay safe and speak to you soon again.
Yeah, thank you for having me.